back, but passive income investors alike, to my $250,000 dividend stock portfolio breakdown. I'm going to go over all the updates, changes, stocks I bought, stocks I sold, and where my mind is headed in the future. So in the clarity of my transparency, as I document my financial independence to hopefully one day retire early, consider helping the channel out. Hit that like button, folks, and let's zoom out and kick this off by just taking a look at the broader overview. And it is a good time to finally remind you that we did a big update on our stock portfolio trackers. We decided to simplify the living heck out of these things, and we made an iCloud and a Google tracker version that basically just gives you what you need to know. You can find this at the chartmaster.com. If you already own the product, you would have gotten an email where you got these updates, so that way you're not jumping between like 10 different pages, and you can just put in your portfolio and it's all right here. Use passive income investor coupon code for 15% off. But taking a look, guys, my portfolio has rebounded beautifully. I mean, this thing hit a peak of about 260,000, pulled all the way down to about 240, and now we finally found this base median right in the middle, sitting at $250,572, guys. I just added up my entire dividend yield, and it currently sits at a perfect 3%, literally not a percent more or a 0.% less. And accumulating those dividend amounts, it currently equates to about $7,545 after all those bloody dividend cuts from the RioCan, from me selling GEO Group, and just the pain of my REITs. It has finally started to creep back up because, my goodness, did I get hit real heavy on those cuts. But overall, guys, not bad to be making $628 a month right now. And the only thing that is not included in there, I think, is withholding tax. I'm not sure if that's before or after, so realistically I'd be making around $600 a month in my humble opinion here, folks. Taking a look at the sector allocation of the portfolio, everything is still relatively moderate. It constantly seems to be balancing itself out. But let's just scroll down so I can give you a bit of a more in-depth perspective on all of my individual holdings here, which the only new one that I've really added has been Bitcoin this week, which I'll touch base on in a quick second. But overall, the only thing that I really did, I sold off a huge percentage of my Lockheed Martin because it was primarily funded through my line of credit. And many of you are aware that I have been draining my cash position. I had to pay my taxes over $10,000, a little more than I was anticipating, and it just destroyed my overall cash weighting. And I didn't want to have as much money leveraged into the market. I still own some Lockheed Martin, which actually is not on this list. Actually, this is kind of funny. So I actually own, my portfolio is actually $251,000 because I just realized I didn't add Lockheed Martin in here anywhere, which means my dividends are even slightly higher. But nonetheless, folks, taking a look, my aggressive growth. So if we took all my growth, my SRAC, my MindMed, my ARC-G, my Bitcoin, we add this into the aggressive growth fund. After this got plummeted into the ground, I'm still only sitting on a 7% weighting when I used to be sitting on a 10% weighting even just a week ago. So obviously my growth stock's still getting just beaten to the ground here with my growth being still around flat. I think when I did my update last week is around 65,000. Today we're at 64, unchanged. And my dividend stocks, thanks to my banks, my RioCan, I mean, look at RioCan, making up 12% of the entire portfolio here, guys. Over $30,000 in value today. Crazy, those recovery plays. So it really bumped up my dividend weighting to 67%. So now my growth weighting is 26% and the aggressive growth is 7% here, folks. But what I'm going to do, let's fly through the individual accounts real quick, and then I'll tell you what I'm going to plan on doing moving forward. So let's kick it off by looking at my tax-free savings account here, folks, where the biggest return in the recovery plays, of course, being those Canadian financials. And again, if you bought JP Morgan, Bank of America, I mean, I got to applaud you guys because now is not the time to be buying banks. I have completely cut off buying banks at this point because, I mean, they fully recovered. Look at Bank of Nova Scotia, Canadian Imperial Bank. I mean, Toronto Dominion. If you guys are OG, you might recall that I've never really been green on these companies for the last 3, 4, 5 years that I've owned them. And now it's just been a recovery with a vengeance, right? And then same with Northland Power. If you guys are into the renewable sector, I really hope with things like Enphase, you were able to pick up those incredible dips because it's almost fully recovered as well, back up to $44 a share. I think it peaked at around $45, $46 a share. I could be wrong. Don't quote me exactly on that. But nonetheless, it is starting to recover pretty nicely here. And it was almost offering a 3% dividend yield at the very bottom when it hit about $40 a share. So, I mean, I put out a buy rating for you guys. I told you I'd be picking these stocks up. RioCan, I'm sitting up pretty healthy. I wish I was up a little more in this account on my main position, but overall my average cost is $17. So by God, no means complaining here. On the US side of the border, however, Altria Group is starting to do something it hasn't done in a while. Trickle its way up, folks. So you smokers out there, still making us dividends, which I quit. Actually, it's been pretty impressive. I should applaud myself. I'm like, I think 4 or 5, half a year deep now without smoking or doing any nicotine products. So I've definitely kicked the bucket on them nicotine products, but still collecting them dividends off MO. I contributed, if you own MO, by the way. I was a good contributor to some of their products once upon a time. We got Apple in here, Microsoft, my tech still doing nothing, British American Tobacco on the other side of the sin stock sector. All of these things in here are relatively flat, in my opinion, except for Stable Roadhouse Acquisition Corp, which is only just starting to come back. Good thing I don't own a lot of this, but God, am I getting hit. It's probably one of the worst positions I have right now that I'm down 40% on. With SAG Industrial falling not too far behind. This is the one that I should have put my money from SRAC into, because STAG, I mean, I picked it up at such a good price at $30.53 a share, and it's up to $33 now, up $600, collecting a very healthy over 4% dividend yield. Taking a look at the managed account, guys, here's the rest of my Lockheed position. I definitely minimalized that. It used to be $10,000. I'm glad I could keep a little bit nonetheless. I did not lose money on this. From a risk tolerated basis, I could just not keep money that is all accredited in this account when I don't have enough capital to back it up in case things dropped or I got hit or something really bad happened. But I'm still happy. I managed to keep a little bit. I'm going to try and find a way to buy more of this by liquidating my MindMed, my SRAC out of this account. And I'm doing that because I'm going to be transferring it into a business account, at which in here, I'm probably just going to continue to add to some dividend stocks. But moving into my RRSP account, guys, not much is going in here. I'm really unlikely to touch anything in here. I might sell BABA down to, again, transfer all of my growth stocks into a corporation. But for the time being, I'm just sitting real patient. And I'll talk about the corporation in a second for those of you that aren't aware of what I am attempting to do. But my final account, my RBC account, well, not my final account. I opened another account. We'll talk about it in a sec. In here, guys, we can see my TD position, my BNS trading up absolutely incredibly. RioCan up 27% in this account. I'm finally seeing a bit of a rebound. You might recall from last week, I was down about 10% in my US holdings in this account. Now I'm only down 7%. Things are pretty good here, guys. Again, SRAC getting hit pretty heavy. I'm up on Facebook, QQQ, and ARCG still getting hit pretty heavily here overall. But the newest account in general has been my Wealth Simple account. I'm purely opening this up as a cash account. I told you guys I'm trying to build out a $20,000 emergency fund after I paid my my government taxes. It's pretty appropriate at this point for me to start rebuilding my cash position and just put myself in a place of power and security. And that comes with cash in a diversified emergency fund with actual cash in hand, cash, gold, precious metals. I want to buy some Bitcoin. I want to buy some CAD and US currency as well. And it'll be divvied up. I'm not sure how much crypto I'm going to buy. I've got about $750 in Bitcoin right now. I'm probably going to build this up to about a $3,000 to $5,000 position at the most, and then I'm just going to park it, set it, forget it, and I will only tap into this if I need capital. So for the time being, that is where I currently sit. I'm not going to talk about Bitcoin anymore. I don't want to offend anybody. It's a very polarizing topic, but where I sit patiently awaiting is I called these guys on Friday yesterday. I also talked to the bank. I am desperately awaiting because the government is really backdated right now. This should have only taken 3 or 4 business days to incorporate my new business, and it's already been over a week and I have not yet to be incorporated, and it's really frustrating and really annoying because I need to get all my business accounts, all my credit cards, all my income, all my websites, all this YouTube channel stuff into the corporate account, because right now every dollar I make, everything I touch is in my personal name, and it all comes with a tax event. Every time I trade a stock, tax event. Every time a sponsor pays me, tax event. I need to cancel all that, transfer it over into the new corporate account, and then I can pay myself a salary rather than just getting taxed on everything I touch. This is a whole topic in and of itself. I briefly touch base on it every video I've done on my account. So hopefully in the next week or two, guys, you'll get to see me do this massive transfer, and then over time you'll get to see the tax benefits and how I pay myself as a salaried employee almost out of the corporation. It's a very finicky topic in and of itself, but I think there's a lot to learn here, and I'll continue to update you guys week over week as I do. So I highly suggest consider subscribing to the channel, help the channel out, guys. Continue supporting my growth, because I mean, when I started this channel, I barely had $100,000. When the crash hit, I lost 30% of my portfolio, and here we sit over $250,000, even in the midst of the volatility, folks. It's some pretty incredible stuff to be sharing. So in light of all this, I want to know what you think in that comment section below, but stay cool, stay awesome, and I look forward to catching you tomorrow.